Hi there, Serial Trader here. I want to do an update on the major US indices as I think we might be at or near an important inflection point here. And I actually want to go back to February of 2020 to do some comparisons with where we're at now before I get into our most recent price action here to analyze. So I want to point out in 2000, well, in 2019, this is where this analysis will begin from. So in 2019, we finished obviously some sort of corrective pattern in October, and that happened to be on October 3rd, 2019, where we're going to start this look from here. Now, I believe we had this. We had an impulse wave off that corrective low in October of 2019 that finished on February 19th of 2020. And let me just adjust the degree up here a bit, maybe. Well, I could even make it a minor degree. It's not that important, but so we had, and even within one, you can see 1, 2, 3, 4, 5 for 1, wave 2, 1, 2, 3, 4, 5 for 3, wave 3, A, B, C for 4, and then our final move up in wave 5, and then obviously we had this huge drop down beginning from that February 19th top to our March 23rd, 2020 low. And everyone attributes this big drop to the COVID situation, but really, for quite a bit of this climb up here, I mean, COVID already existed. It was already known that there was some sort of major problem happening in China that was starting to spread. But no, everything was all good until it finally wasn't, and that's because, in my opinion, and I think the chart certainly supports this. Once we finish this impulsive pattern, then things were allowed to matter, basically, if you want to look at it that way. But until the crowd is done with their pattern, it doesn't change, regardless of what's happening in the real world. Again, in my opinion, and certainly supported by plenty of examples on charts, but I won't get into that too much. And if we go to the weekly chart here, just for a little bit of a bigger picture view. So from our 2009 low there, I believe March 2009 low, and just keep in mind March is often a pretty negative month, it seems. But from the March 2009 low, I think you can support a pretty mature looking impulse wave up on this weekly chart. 1, 2, this was a huge 3. And then this was actually an A, B, C, big expanded flat wave 4, and now we're going up in what's probably a final fifth wave of this entire uptrend from March 2009. Not necessarily saying it's done here, but definitely getting mature. So just to give some context here on the overall trend, long-term trend. But anyway, after we did this 5-wave move up from the 2019 October lows to our February 2020 highs, we had a huge pullback in the market. Now, I'm not sure if we're setting up for that magnitude of a pullback. I think that was like a 35% or so decline, peak to trough on the S&P. But I do think we're setting up for some sort of, notable correction, at least in the hundreds of SPX points kind of magnitude. And I'm certainly ready for it to be bigger, but expecting at least something in the hundreds of points, So let me just delete that. Just wanted to show the similarity from that October run to the Feb peak from 2019 to 2020. And here we are. We had a, stay with me here. We had a bottom in October, okay? The pre-election low. October 30th, 2020, we had the bottom. And from that point, it looks like we're near the end of a 5-wave sequence out of that. So now we're going to look for some sort of correction, maybe not a 35% 5-week crash, although, why rule it out? It happened then. It can certainly happen again, regardless of what people think or say that, oh, it can't happen again. Well, of course it can. Market history is full of big crashes. Why would now be any different? You can always make up a reason why you think it's different, but in the end, it usually isn't, right? Okay. Now, onto this daily chart here for more recent action. So from our 2020, March 2020 lows, now there's different ways to count this, but the way I'm kind of running with here is that we have a 1, 2, 3, 4, 5 up, possibly for initial wave 1, A, B, C, possibly for wave 2, and now this might be a 5-wave sequence for wave 3 perhaps. We would be looking for a intermediate 4th wave correction. So not world ending or anything, but a large degree correction. Something that takes more than just a day or two, like multiple weeks at least. I mean, this wave, if this is a wave 2 correction, if that's the correct labeling, it lasted from basically the beginning of September to the end of October. So that's a couple months of corrective action. Did it go straight down? No. You had an initial move down, a move up, then a secondary move down. But a corrective period, right? You weren't just trending up during that period. You were sideways to down for a couple months. So that's, I kind of expect to be a minimum here, as far as what we're approaching. But there's also ways to count this entire thing as 5 waves up and done for that big degree wave 5, okay, to match the entire pattern off the 2009 lows, and we're gonna correct a much larger degree 5-wave move. Now, I'm not ready to go there yet, but just be aware that's possible. There's certainly enough on the chart to support that potential there. But I'm not ready to go there yet because I think there will be plenty of short-term things to look at long before any of this longer-term stuff really matters from a trading perspective. Now, I go to a 4-hour... Well, another thing I'll point out, okay. So at major peaks, you want to see divergences, right? So this is the weekly chart. So since we made our... Oh, actually, we've got divergences on RSI going all the way back here. Look at this on this weekly chart. So from this RSI peak we made in January of 2018, every time we've made a major market peak on the weekly chart, we've made a lower high on the weekly RSI. So that just kind of tells you there's a big divergence on the weekly chart. That's all it really tells you. But it's something to look for before a major peak is to have divergences. So we certainly have divergences on the weekly, like multi-year divergences on the weekly chart for RSI. On the daily chart, a little closer, to present day. So we had a big RSI peak in our September top there on September 2nd. And you can see since then, even though we've made higher highs in price, certainly lower highs in RSI. So that's another divergence on the daily chart. A little more recent, maybe a little more relevant in the near term here. So, okay, we've got some, notable divergences established here on weekly and daily RSI. Now, if I go to maybe the 4-hour time frame, you can certainly make the case that we have a mature-looking 5-wave sequence coming off our October low here. And 1, 2, 3, 4, 5, okay? And if I were to draw the Elliott final channel where you connect wave 2 with wave 4 in parallel off of the wave 3 peak, usually that upper channel line provides a nice kind of target area for wave 5. If you get a real exuberant wave 5, you can do what's called a little throw over, and then once you get back below that channel line, wave 5 is likely finished. So we haven't gotten back below the channel line yet, but something to continue watching. Okay, and I would say disregard whether this is 5 waves up for that larger 3. Let's just focus on that. Okay, we got 5 mature looking waves up nearing at or near completion, right? So this is the 4-hour chart. Now if I go to the 1-hour chart, so you can see this nice little ABC for wave 4. That's what it ended up being. And that was certainly discussed in the previous video that could have just been a nice AC equality kind of measured move correction down. ABC, just about equality, and then boom, up we go, and that's what it was. That possibility was certainly entertained, and that's what ended up happening. But from that point, there's some good information here. So I think from that low, again, we're on the hourly time frame, probably got a 1, 2, 3, A, B, C, D, E, triangle 4. and then up in 5, and let me just drop this down 1 degree there. And I think that the triangle is providing important information here, because the triangle precedes the final move in a sequence. In this case, wave 4 would precede that final 5th wave in an impulsive sequence, which is what we're dealing with here. And you can see subwaves of the triangle certainly work just fine. A, B, C, D, E. And let me just check the degree on that. Yeah, I think that's where we want it. Minuet. Okay. So being that we just came out of the triangle wave 4, it's possible that we've already put the market top in today. Okay, and if we just do a upward objective, so the largest wave of the triangle, in this case the A wave, if we do some of our common fib projections, we got the 1.382 and 2. We've basically rejected almost perfectly off that 1.382 fib target. So that could be it. That could be the top. But what I really need to see, let me just zoom in here a bit more on the hourly. We need to get below, well, certainly initially this E wave low in the triangle, so that'd be 39.14. And sorry, I'm just mining some Ethereum, so that window popped up there, but get that out of the way. But even more confirmation would be getting below this low here, which was at 38.84.94, the lowest part of that triangle correction. That means we truly can't count this, because if I go in, let me go in on maybe the 15-minute chart for a little more detail. See, we still have the possibility that this wave 5 is developing, right? We could still be doing this, where we got maybe just initial 1 up of 5. Maybe we got the 2, and then you need the 3, 4, 5. And let me just adjust this degree to fit. And let's make this look a little more proportional. So this is still a possibility, okay, that we need to go up and finish this, right? Now, this is only a possibility as long as we stay above these key support levels. What will really get my attention is breaking the E wave, of course, because that's technically an invalidation level. Because this impulse wave out of the triangle, basically, that's the origin point for it. So breaking that area would technically negate that we have any more upside left. But true confirmation, I think, would be taking out this low down here, 38.84.94. So there's potentially some short-term upside left, although it is also possible that we've ended. So I'd be on high alert here for some serious downside, but not confirmed yet. So I'll just I'll throw that out there. Back to the hourly chart, and I think even on the hourly here, you had some divergence. You see, you had an RSI peak here, and then a lower high in RSI with a higher high in price. So really all the ingredients for some sort of at least reasonably significant top, maybe even a very significant top, all the ingredients are there looking at our wave analysis. And this coming Friday is literally the anniversary of the top in February of 2020. It'd be kind of funny if it matches exactly to the day of last year's February top. I'm not saying that'll happen, but certainly things are lining up where we're close to that being a possibility. And I said there is at least some reason to believe we may have already peaked. We did get a nice little pop out of the triangle on this hourly, and now we've started some sort of decline, although we've got to see some of these support levels get taken out, these short-term support levels, to support that we do have the top in, and not just a smaller degree wave 1 of a still developing 5. So hopefully you stayed with me through all that. That was kind of deep in the weeds going through the wave analysis, but hopefully at least some of you found that interesting or helpful. Now, if I go to the Thinkorswim candlestick chart, so looking at the daily candle in SPX, okay, a little bit of potentially a doji star reversal, but nothing really notable as far as a candlestick sell signal, just a potential reversal day. very much unconfirmed still. I won't bother with the weekly. Nothing really important to look at there yet. With the Dow Jones Industrial Average, same idea. Nothing there on the daily candle. Nothing to suggest a reversal, really. NASDAQ Composite. Maybe a little bit of a dark cloud cover candle. But still, you really got to start breaking some short-term support levels to entertain that, okay, we got something, significant to work with as far as a top in place. It's possible, but not that convincing yet. Now on the VIX, only thing to mention on the VIX is that we're basically at the, the lows that we've been at for a while. So this is an important low on the VIX. We had back here, I believe that level was 1951. You can see we got as low recently as 1969, but this seems to be an important support area for the VIX. Starting to try and pop up a bit here. Up, over 7% on the VIX today. So VIX not sending any strong message yet, but looks like its refusal to go down, even though the market's still making new highs. That's usually a bit of a precursor to a top, right? So I figured I'd point that out. And I think something worth looking at here is the VIX VVIX tool. And this is sending an interesting message. So we had so VVIX has been going up, even though SPX has still been making new highs. And even though VIX itself actually recently went down, made a new, at least local, recent low, unconfirmed by VVIX. So VVIX is above the red moving average, and that happened as highlighted here with this little yellow box. You do have a divergence between VIX and VVIX, so you can see here that VIX made a new relative low. VVIX is certainly making higher lows and higher highs, so that's a divergence between the two. So those are kind of the precursors to a sell signal. The actual confirmation will be SPX going below this blue moving average, which is currently sitting around 39.17, which isn't far away. I mean, we're like maybe 15 points or so away from that that moving average, which if we get below and stay below is kind of the all clear for the sell signal, right? The confirmation. Not there yet, but certainly looks like we want one. Okay. So could be a very important week. We may have already even put in the, a big top today. Not that convincing yet, but it's possible. But I think within the next week or two, certainly heading into March, we should really be expecting some sort of more significant, at least, correction. I'm not necessarily calling for a big crash, although possible. Definitely can't rule that out. But foolish to call it before it at least starts happening. So advice, if you're long, I'd be tightening up those stops or reducing, averaging out your winning positions. If you want to get short, no real confirmation yet, but certainly an area to be lightly starting some bearish positions and looking to add on some confirmation. Yeah, so that's all I got. I think we got some big similarities here from February of last year to now, both in the wave count and also just the general timing of everything, and also the conditions. Like right now, all news is good news, no matter what. The market just finds a reason to go up until it doesn't, right? It was the same in that February of 2020. There was this concerning new virus in China. It was spreading. I think it was even in Italy, causing some havoc already at that point. And no, it doesn't matter, doesn't matter, doesn't matter. And then once the, the sequence completed technically, and then all of a sudden things started mattering, or so it seemed, right? So I think we're kind of in a similar situation across the board here. So I'll leave it at that. All right, let's see what happens the rest of this potentially pivotal week. Serial Trader signing off.